So we'll be doing question 2.5a. We should write into it. I won't be reading the question. So our first entry, we are going to enter it at bank account. Bank account. So the bank account, the first entry is going to be in the share application and allotment. So our customers there applied for 200,000 shares. So we are going to multiply 200,000 by 0.65 of application. So 200 brackets here. 200,000 shares. 200,000 shares times 0.65 times 0.65. So that is going to give us 130,000. So now we open, since we have entered 130,000, we open the share application and allotment account to enter, to be able to credit it with that amount here, 130,000. Share application and allotment account account. We debited our 130,000 is from the bank. So now we credit it, not debit. Bank. $130,000. Our next entry, we are going to do the allotment. So even though 200 shares were applied, the company can only allot 100 shares. The company can only allot 100 shares. So that means 25,000 of those shares were fully applied for, and then 100,000 of them were used on the basis of 3 shares is to 4. That means it's 25,000 plus 65 plus 75,000 equals to 100,000, right? So we are going to allot shares of 100,000 times 0.55 minus the excess money that is coming from the application money. So share application and allotment account, it is equals to bracket there, bracket 100,000 times 0.55 minus 16,250. That amount is going to be 38,750. 38,750, and then we credit it at the share application and allotment account. It is from the bank. It is 38,750 crediting. Now, the next step is for first and final call. In first and final call, it was said 5,000 shares were forfeited. Someone failed to pay for 5,000 shares, and that leaves us with 95,000 shares for first and final call. That means we are going to say 95,000 first and final call in bank account. It is going to be 100,000 minus 5,000. Brackets 100,000 minus 5,000. $100,000 minus 5,000 times 0.3. It is going to be equal to 28,500. 28,500. We are going to credit it. Now we have another account there because we have said that we are debiting the bank by first and final call. That means we are going to open another account called first and final call. That we are going to debit with that money that comes from the bank. Credit, not debit, credit it with the amount that has been received at the bank of 28,500. Okay. And then we have we have to close some shares there, some accounts there. So we are going to, before closing them, we'll have to open the ordinary share capital account. We're going to open, we have to open the ordinary share OSC account. So there was a note in our question that says Kamas issued share capital on 1 October 2019 consisted of 500 ordinary shares of £1 each. So we have those shares, we are going to bring them down. So ordinary share account is going to start with balance brought down from that statement. Which is 500 shares times £1 equals to 500,000. The next entry, now we look at our share application and allotment account. We'll be trying to close it. We'll be trying to close it. And remember, in our statement or in our question, there were 75,000 shares that were returned. In A, they say to return checks of 75 shares. So that money, since the money was returned, we have to return it. The first thing we do in our share application and allotment account, we have to debit the share application and allotment account by the money of 75,000 shares. So it's going to be bank. We are debiting is bank And then let's say brackets refund, we are refunding them. So when we calculate 75,000 shares times 0.6, 75,000 shares times 0.65, it will be equals to 48,750. So that money has to be credited somewhere. Since we reference it with the bank, we are going to credit the bank. So let's just say application and then bracket refund. We are refunding people their application money of 48,750. Okay. Now, remember, we have a share premium. In our equation, there it was written that our share premium rate is 0.50. So we are going to calculate that share premium. We are allotting 100,000 shares as a company. So we are going to say 100,000 times 0.5. So share premium on premium, share premium. Let's just write S premium because we are having trouble with our H here. S premium is share premium. S point premium. That's share premium. So our share premium brackets 100,000 times 0.5. Zero 0.5. That's the rate of our share premium. It's going to be 50,000. Now we can close that account. So we look which side has a larger number is the credit side with 168,750. 168,750. So what is our balance to be able to balance the debit side? Our balance is 70,000. Our balance is 70,000 there. So that 70,000 of our balance is the one that goes to the ordinary share capital. So we say OSC is going to the ordinary share capital. So yeah, now our share application and allotment account is balanced. We go, since we have now have OSC of 70,000, we go to the OSC account. We credit it with that 70,000. So the 7,000 is coming from the share application and allotment account. So SAA 70,000. Now, remember, we have a new entry now. In our share application and allotment account, there is a figure there for share premium, and then we don't have any account to credit that. So we are going to open our share premium account to be able to credit that money. So we are going to open a share premium account to be able to credit that 50,000. So our first entry in share premium account is from the share application and allotment. We credited 50,000. Okay. Remember, we have 5,000 forfeited shares, so we have to open an account for them. They've been forfeited, so we'll have to open an account for those 5,000 shares. Forfeiture account. Account. So forfeited shares are going to reduce our capital. So that means we are going to credit the forfeiture account and debit the ordinary share capital. We are going to credit, so we are is OSC, and then you credit the forfeiture account with 5,000 of those shares, and then go to the ordinary share capital account for feature, and then debit it. Let's try to close now the first and final call account, because we have already closed the share application and allotment account. So we are going to close it by debiting it. So here, so even though we got the 28,500 from those 95,000 shares, remember, we are supposed to allot, or we are supposed to be paid the first and final call account of 100,000 shares. So that means we are going to debit them with the money of all the 100,000 shares. So we are going to say OSC 100,000 times 0.3 times 0.3 equals to 30,000. So OSC 30,000, we debit it with 30,000, and then we are going to credit the OSC now from credit the OSC account from first and final call 30,000. First and final 30,000. Okay, we have entered our 30,000. Now we can go back to the first and final call account to close it now. So there, the larger side is the debit side. So we are going to use it to balance the credit side. So you bring down the 30,000 from the debit side.
Tim on the floor, I think you were supposed to assist your team here. I've observed the 2, if not 3 scenarios where you're actually ignoring when he's saying something. First, on the share application and allotment, in his presentation, I'm just talking about his presentation, the way he was actually like telling us, he said that there was a refund, hence we should debit bank, something like that. Under normal circumstances, the bank is under details, so it's not that I'm talking about. Yes, the presentation is fine, but the way he was like telling us, it's actually different. This is not what we are supposed to do. We are supposed to say debit share application and allotment, then we credit the bank. The narrative, the way he was presenting, he said we have to debit bank. as if in the bank account we must debit. Here, remember, bank is our under details. So in other words, our bank account is the one that is losing. If it is losing, then we have to credit it. That was number one. Number two, still on the share premium, share application and allotment. He said to us, we don't have an account for it where we are going to put the share premium. Team, I think we have that account. In other words, if there's a share premium, we have to straight away open share premium account. So we debit share application and allotment and credit share premium. That's the way you should actually present. Debit share application and allotment, then you credit share premium. An accountant or someone who did accounting knows that if I say debit share application and allotment and credit share premium, it therefore means that under the detail in the share application and allotment, I have to write share premium. Then under the detail and in the account share premium, I have to write the share application and allotment. That must be known. Then the other issue that you guys on the floor you were supposed to attend was the first and final call. You guys, you keep quiet when you were supposed to comment. This is my story. You said this is what your other team members said. They said on the first and final call, everything was fine. Bank credit this account by bank 28,500. But the mistake in terms of his presentation, he said on the debit side of this one, we have to debit by 30,000 OSC. That is not the truth. The truth is you are supposed to finish with the credit side first. Then it is this balancing figure that you then that will assist you to close this account. Let me repeat. This account, we said we are supposed to receive 30,000. But why is it that we receive 28,000? Then you're going to say the other one, the 1.5 is what? Forfeiture. Yes. So which means from there, what are we going to do? We're going to credit first and final call 1.5, then debit forfeiture account by 1.5. So the balancing figure now, if we are now balancing this account, it now goes to what? To the ordinary share capital. So the way he explains, he said, first ordinary share capital 30,000, then we balance. No. It should be this side balanced first. So the balancing figure is the one that goes to ordinary share capital. So forfeiture is not balancing, but it's already there. You are interpreting to say there was this forfeiture. We sold the forfeiture for 1.5, which we're supposed to get we're supposed to get 1.5 from this forfeited account, but we didn't. So the balancing figure, that's how he is supposed to present. So I just chipped in because I saw that there was a mistake. Then he's not yet there, so you can go ahead. Thank you. Right. No, come and check on one.
Okay. That means I was taking shortcuts there. Sorry for that. Okay, we'll continue. So where are we? Share premium. Where are we? So we are trying to close the first and final call account. So like Sarah was saying, so now remember the reason why we didn't get the whole 30,000 in the first and final call. We have forfeited. Someone has forfeited his 5,000 shares. So those 5,000 shares times our 0.3 of the first and final call is going to be 1.5. So we are going to credit that first and final call by that 1.5. Okay, now we do the total from the credit side. It is going to be 30,000. Going to be 30,000. 30,000. So balance the first and final call account. That's how we get the OSC 30,000. So first, we have the 28,500 from the bank, and then remember we have 5,000 shares forfeited. Those 5,000 shares times 0.3 equals to 1.5. That 1.5 plus 28,500 of ours is going to be our 30,000. So the total is 30,000 in the credit side. When we balance our first and final call, that's how we are going to take it to the debit side, that 30,000 that we found on the credit side. So we have a forfeiture of 1.5 coming from the first and final account. Now we are going to go to the forfeiture account. We are going to, since it was on the credit side, that side, we are going to debit it in the forfeiture account. So it's from the first and final call, 1,500. 1,500. Now we go to we have information that there was someone who paid for those forfeited account, who's called Ember. We are going to Ember's account. Ember's account. So before we attend Ember's account, remember Ember has paid for those shares at a rate of 0.8. It was 5,000 shares at a rate of 0.8. That means we are going to say 5,000 times 0.8. It is going to give us 4,000. It is the money that we are receiving from Ember. So we are going to debit it in the bank account. It is from Ember, 4,000. It's 5,000 times 0.8. 5,000 times 0.8 is equals to 4,000. We received that money from Ember buying the forfeited shares from the person who forfeited them. So now we have entered that 4,000, we debited it in the bank account. We are going to go to Ember's account. Ember's account, we credit that 4,000. It is coming from the bank. We credit the 4,000. It was going to the bank. And then now, remember what the value of the shares that Ember was buying. The original value is 5,000, right? The original value of the shares that were bought by Ember is 5,000. That means somehow Ember might have got a discount. We'll see what's happening. So we are going to debit Ember's account with those 5,000 shares. So debit Ember's account with 5,000 shares. Now we have to balance Ember's account. Ember's account looks like it is short for us to be able to balance it. It is short the credit side by 1,000. So where did that 1,000 go? Remember, he bought or she bought the account using the rate of 0.3, while the original amount of the shares was £1. So that means Ember got a discount there. If you can calculate that discount of 1,000. That means now our credit side and our debit side are going to balance nicely. So Ember bought 5,000 shares, right? 5,000 shares. at the rate of 0.8. The original amount of those shares is what before was £1. So that means in our company, the shares, the value of those shares is 5,000. Even though Ember got them for 4,000, it was she had a discount of 1,000 £1,000.
So, before you go further, I want you to explain why you say ordinary share 5,000. What is the occasion? Can you give the interpretation why you say Ember credit Ember by 4,000, credit Ember by 1,000, then you also debit Ember by 5,000? Can you just give a clarification? What is happening there from your perspective? Say what do you think is happening?
Where the Ember account?
Yes. Let's just talk realistically. What is happening at Ember? Let's just focus on Ember.
When she's buying the forfeited,
yes.
the forfeited shares, so we give them at the value that they were supposed to be given at 5,000 on the debit, and then she bought them at a discount.
But what does that mean to say we debit Embers by 5,000? What does that mean?
So Ember bought shares for 4,000, right? Those shares are 5,000 shares. In our company, the shares originally are £1 a share. So those 5,000 shares, their actual price in the company is 5,000. They hold.
I agree with you on that.
They hold the value of 5,000. So Ember got them at a lower rate compared to the original price of the shares.
100% I don't have a problem. But I want you to tell people, a lay person who doesn't know anything about what accounting, I want you to tell him what is happening there. Okay. What is happening there if you check? Ember paid 4,000. We agree.
Yes.
Then what does the government do? What does the government do?
When she pays the
4,000.
The government want their cut from the money. I don't know.
No. What does the company do?
Oh, the company do.
Again, he pays this lady or man paid 5,000, 4,000.
Yes.
Then what does the government do?
The company issued the
good. So the company issued, and this guy Ember, he is receiving 5,000
shares.
Again, you know the concept. David the receiver, credit the giver. So in other words, Ember is receiving 5,000 value of share, but what he paid for those 5,000 value of a share is what 4,000. Then what happens? We discount it. That's the explanation that we need. So it's not about you just say, okay, fine. What happened is that Ember received the 5,000 value of share, but he paid 4,000 instead of 5,000. So, which means the company offered or issued them at a discount. That's the explanation that we need. We need a lay person or a novice to understand what we are talking about. Yeah.
Okay. We are done with Ember's account. Ember's account now. From Ember's account, we have a discount of 1,000. We are going to debit the forfeited account with that 1,000. From Ember's account. Remember that. Now, let's try to balance our forfeiture account. Our forfeiture account, from the credit side, we have that 5,000. That means our total, the larger side is from the credit side, 5,000. And then now we have to balance the debit side, knowing that it's supposed to be 5,000. The balance there is 2,500. Going to the ordinary share capital. And then what is next? Let's go to our no. Wait. That 2.5 doesn't go to the ordinary share capital. It goes to the share premium. It is the share premium. That means we are going to credit the side of the share premium account. We're going to credit the share premium account with the 2.5 from forfeiture. $2,500. Now we can balance the forfeiture account. The total there in the credit side is 52,500. 52,500. Then the balance brought down in the share premium account will be that 52,500. Balance brought down 52,500. Then the total of the debit side of the share premium becomes that 52,500. We are able to close the share application and allotment account, the first and final call account, they forfeited, and we have reclosed them. And then the share premium account, have we closed it? Yes, it's closed. What are we left with? Embassy account is closed, right? Okay. Now we can go to the bank. Now we can go to the bank and try to close the bank. The total on the credit side of the bank is 200,000. On the debit side, not the credit side, on the debit side. So the total on the debit side of the bank is 2,000, 250. That means the other side's total supposed to be 201,250. Now there will be a balance carried down because 201,250 minus the 48750 of from the application and allotment account is going to be 152,500. Now we are only left with our one account to close. That is the OSC account. OSC account. So in the OSC account, remember when Ember was receiving those 5,000 shares, we debited them on Ember's account. Now we have to credit them on the OSC account, ordinary share account. So we are going to say Ember 5,000. So our total on the credit side of the OSC now is going to be 605,000. Then we are going to balance the debit side. So the total is going to be 605,000 on the debit side. That means we are going to have a balance carried down of 600,000. We are going to say 605 minus that 5,000 from forfeiture. It's going to be 600,000. Now, statement of financial position extract. We have the bank. Statement of financial position extract. We have the bank assets. Our asset is the bank. Is equals to assets that's the bank. Our bank has a balance carried down of 152,500. Bank 152,500. We have 152,500. No, that's can match them. Financial positions. And then we are going to have the equity. Equity and share premium. Share premium, S premium. So our share premium, we are going to look at our share premium account. We have the balance carried down of 52,500. Now in OSC, our OSC account, we have the balance carried down of 600 shares.
Yeah, but our question doesn't require us to go that beyond, which means they know that it is not on balance.
Okay.
Then we stick to the question. The question doesn't have
the 600. Yeah. So the extract, we are not doing it because it was not going to balance like say said the 600 was going to make. Okay, thank you.
Thank you, guys. Okay, thank you. Let's attend whatever you are going. Thank you so much for your presentation. I think I'm happy, but just 1 minute. Though there's one thing that I wanted to mention. Your team didn't. I don't know how they arrived at. They didn't say on the ordinary share amber 5,000 when it was supposed to be here. You said something. I was listening. As you were trying to close this account, you then say we have to we credit ordinary share by amber when it was supposed to be double entry. The fact that you are giving this amber ordinary share, automatically we're supposed to credit the ordinary share. It was not supposed to be the last thing. Was when, yes, because agree is double entry. Yes. Anything, once you enter debit side, corresponding credit. So you guys, you entered on the debit side, then you waited. Then as you were closing down, then you said, so what will be the balancing figure? Oh, it's amber, which is, so in other words, logically, it should be debit amber, then credit ordinary share. But otherwise, I'm happy with your presentation. Thank you so much. Thank you. Bye. was a good presentation. So we are actually looking forward for those who are going to listen to this. As they are going to listen, they are also going to learn more. And I think our test one will be just but a walkover. Thank you so much. Bye.